Almost everything around us requires one incredibly sticky, viscous substance to exist. From the fuel burning inside commercial jet engines, to the electricity keeping your lights on, right down to the molded plastic wrapping your groceries, oil moves the modern world. And while this dark liquid fuels our daily lives, its steady flow is strictly managed by a single organization that has spent the last 60 years pulling the levers of the global economy. To understand how they do it, we have to look back to the years before 1960. Back then, a group of massive Western corporations, known collectively as the Seven Sisters, held absolute dominance over the industry. They extracted the crude, shipped it, and set the global prices at the pump. Meanwhile, the countries where this oil was actually buried watched their natural wealth flow overseas. They pocketed only a tiny fraction of the profits and were pushed to the margins of their own economies. For these resource-rich nations, losing that revenue meant losing control. Without the ability to manage their land's most valuable asset, they were left powerless on the global stage. That power dynamic cracked in September 1960. Representatives from Iraq, Iran, Kuwait, Saudi Arabia, and Venezuela gathered in a modest room in Baghdad to negotiate a unified pushback. They formed OPEC, the Organization of the Petroleum Exporting Countries, specifically to take back control of their resources. Look at this balance scale, comparing a barrel of oil to a stack of profits, representing the law of supply and demand. If member countries pump less oil, global supply shrinks. When supply drops, the price for the remaining oil instantly surges upward. OPEC had designed a powerful strategy that gave a unified voice to nations that had previously been ignored. By controlling production levels, they finally had a tool to directly influence the international markets that relied on them. The world felt the true weight of that tool in October 1973. The Yom Kippur War broke out between Arab states and Israel, and several Western nations, including the United States, immediately offered military support to the Israeli government. In direct retaliation, the Arab members of OPEC unified to launch a massive economic counterattack, a total oil embargo against any nation providing that support. The macroeconomic shock was immediate. Within months, the global price of oil quadrupled. Western societies, completely reliant on cheap fuel, suddenly ground to a halt. Gas stations across the United States were forced to ration whatever fuel they had left in their underground tanks. Panic set in as millions of drivers faced endless lines, blocked streets, and handwritten signs confirming the pumps were dry. The 1973 crisis proved a hard truth. OPEC now controlled the economic bottleneck of the modern world, and with a single unified decision, they could dictate the foreign policy of superpowers. But maintaining that unified front is incredibly difficult. Behind closed doors, managing the cartel requires constant, intense diplomatic negotiation. Member nations often have sharply conflicting goals. Poorer states facing immediate fiscal crises usually push to slash production and force prices as high as possible for a quick payout. Wealthier states, however, often prefer moderate pricing, wanting to keep their long-term international buyers happy. And outside the boardroom, new competitors began breaking OPEC's monopoly. The United States developed advanced fracking technology, triggering a massive surge in domestic energy production and drastically cutting their need for imported fuel. At the same time, Russia scaled up its own extraction infrastructure, flooding the market with even more non-OPEC crude. These rivals diluted the cartel's influence so severely that in 2016, OPEC made a drastic pivot. They created OPEC Plus, an expanded alliance that successfully absorbed Russia and several other independent producers into a joint quota system. Bringing their biggest threats to the negotiation table proved that the organization was willing to forge highly uneasy alliances just to keep its grip on global supply. Today, that grip remains formidable. Looking at this chart of global oil metrics, OPEC currently controls about 30% of active global production and an overwhelming 80% of the planet's proven unmined reserves. Yet, they are now facing a threat that no quota adjustment or strategic alliance can fix: the global transition away from fossil fuels. Massive investments in green infrastructure are moving from the fringes to the mainstream. The replacement of the gas pump with the electric vehicle charging cable is happening right now in cities around the world. This technological shift hits the cartel's core business model directly. As commercial transportation and national power grids move toward renewable sources, the global demand for crude oil faces a permanent structural decline. So, how does a coalition built entirely on the value of black gold stay relevant in a world actively trying to leave it in the ground? Several member states are already aggressively diversifying their economies. They are pouring billions into high-tech tourism, futuristic city infrastructure, and alternative green energy grids, preparing for the day the oil stops flowing. Conversely, other members remain entirely dependent on crude exports. If they fail to modernize their revenue streams before demand drops, they face severe countrywide economic destabilization. Over the last 6 decades, these resource-rich nations took back control of their own land, forced out the monopolies, and successfully commanded the global stage. To survive as oil's dominance fades, the organization's influence depends on how effectively its members lead the transition into new energy sectors.